Hi, it's Clint Laverty of CS Accounting. It's that time again for the accounting tidbit of the week. First and foremost, all past, present, and future accounting tidbits are for information purposes only. How you use that information is your prerogative. Our topic today is the Paycheck Protection Program Forgiveness Application. Some more intern legislation was released on 8/24/2020. There will be a law passed to provide simplified or automated forgiveness for these loans under a certain amount. The rumors have it that it would be $150,000 and under would be a simplified form. With new legislation coming out, I would suggest to wait on the final ruling due to things changing rapidly, but I wanted to give you an update on the intern rules as of today, as of 8/24. Number 1, owner compensation forgiveness rules. Clarified definition of an owner-employee. Owner-employees who own less than 5% of the ownership stake in a C or S corporation are now excluded from the ownership employee compensation rule that caps the payroll compensation for an owner-employee, as they are not considered to have a meaningful influence over the decisions on how loan proceeds are allocated. Going into number 2, the forgiveness limitations on certain non-payroll costs. Forgiveness limitations for non-payroll costs related to the shared workspace. Forgivable non-payroll costs exclude amounts attributed to business operations of a tenant or a subtenant of the PPP borrower and the household expenses for a home-based business. To clarify this intern rule, there are 4 examples. A PPP borrower who rents office space for $10,000 a month but subleases out a part of that space at $2,500 a month is only eligible for the $7,500 in the loan forgiveness for that expense. A PPP borrower who owns the building and leases 25% of the fair market value of the building to another business, only 75% of the mortgage interest on the mortgage of the building is eligible for forgiveness. A PPP borrower who shares a rented space with another business. The amount of the non-payroll expenses, rent, and utilities eligible for forgiveness of the PPP borrower is prorated in the same manner as it is their 2019 tax filings. If a new business in 2020 expected 2020 tax filing reporting determines the amount of the eligible forgiveness. The 4th example, a PPP borrower works out of his home. Non-payroll costs that represent deductible covered expenses on the 2019 tax filings or expected 2020 tax filings if a new business are eligible for forgiveness. The 3rd and final thought of the intern rule, forgiveness limitations for related party non-payroll cost transactions. Rent payments to a related party are eligible for loan forgiveness if the amount represents no more than the amount of mortgage interest owed on the property during the covered period that is attributed to the space being rented by the borrower, and the lease and mortgage were entered into prior February 15th, 2020. So that's your intern rules, but I'd highly suggest to wait for the actual passage of it. Thank you for your time and make it a great week.